Welcome back to episode 11 of Compound Growth. We're your hosts, Brody Simmons and Mike Vojnik. And today we want to talk about a topic that's pretty hot in the news, data centers. So there's a pretty clear divide on how people feel about data centers. So let's jump right into it.
The four biggest tech companies in the world are about to spend more money building warehouses full of computers, which data centers would call servers, than the GDP of most countries. So we're going to get into a little bit about why they would be doing this, how AI has really played a big part in changing the landscape of this, and what the future holds, whether this is a bubble that could pop or whether it's going to be one of the most lucrative investments in business history.
So a data center is a building with rows and rows of computers to actually store this data for these companies. So whenever people think of, say, the cloud, right, that's like some fictitious thing that nobody really knows what it is. The cloud is realistically a data center with storage of this data in computers. So it is something physical, which people don't realize. And these physical areas take up a lot of space, which is kind of where that controversy comes into play.
It's also computing the inputs that you're putting into a computer, or whenever you go to fire up Netflix, that's actually being sent to a data center. It's being processed there. Everything is happening instantaneously, and then it's shooting back to your computer or your TV in your living room. So that's how it's all happening on the back end, and kind of similar to cryptocurrency or other AI functions. A lot of people view these as, to your point, fictitious or
Intangible.
intangible, whereas there really is a process that it follows on the back end. We just can't see it, and it's happening so quickly that it's extremely hard to understand.
Yeah, a lot of it comes down to electricity inputs and outputs, but it does all flow into one structure, a building where it's all computed and held.
Right. So with data centers, they're not a new thing. They've been around as long as the internet's been around, because anytime you're doing a function on a computer on the internet, there's a cloud-based system involved, and it has to go somewhere, which would be the data center. So being as they've been around for a while, why are we now hearing about them? Why are they becoming more popular? Why is it in the news, and why is it a debated topic?
Yeah, well, I think most of it ties back to this massive explosion and interest in AI. That's been all over the news. Every company's incorporating AI. There's been job layoffs due to it. So everybody knows kind of and has an idea of what it is. But due to that explosion, now we're seeing an uptick in these data centers that are required. Now, previously, there was kind of a chokehold on this due to chip manufacturing, which pretty much all flows through NVIDIA. But
People
now,
would have heard of NVIDIA.
Yeah, probably heard of NVIDIA on the news or somewhere. But now that chip bottleneck is pretty much over, and now it's come to more of a power and electricity bottleneck, where we need the space, we need the data centers, and we need the electricity to actually power them.
Yeah, so going back to NVIDIA really quick, this was one of the most talked about companies in the market. They became extremely profitable. They were the first $1 trillion market cap company. Now, as the years have gone on, they have some competition at this point, right? So there are other chip manufacturers that are putting chips into the marketplace. NVIDIA's ramped up production. Others have done so as well. So that's led to the decrease of the bottleneck that we've seen. And there essentially are enough chips going around at this point.
Yeah.
And to your point, the bottleneck comes down to energy and how are we going to power these things? How are we going to run them? So that brings nuclear into the conversation. That brings oil and gas into the conversation, renewable energy. How are we going to get this electricity from place to place? How are we going to derive the electricity, and how's it going to work for the data centers?
Yeah, because this is an absolute full-on race to who can build the most data centers, who can get there the fastest and become the top dog as far as AI is concerned. So just put it in perspective for the viewers. how much money is actually flowing into this space whenever you compare it to other things, because it's hard to actually compare it or get an idea of how sizable this market actually is.
Right. So the top names that are very popular: Google, Microsoft, Amazon, and Meta. Those four combined are set to spend between 600 and 700 billion dollars on this project here within the next year.
Yeah, that's absolutely insane.
And again, to my point earlier, that is that is more than most economies' GDP, most countries in the world. So there's a lot of public interest in this topic. To your point, it's a race. And it's not only a race between companies, it's a race between countries. So the United States is trying to get there faster than China is, faster than Russia is, faster than any country, because whoever gets there with the AI race is going to lead the way and control it for the most part.
Yeah. And one thing, I might be jumping ahead, but that is a little bit concerning about this, where people might think, oh, this is a bubble, or this has to stop at some point, is that a lot of these large companies, like what you named, are not using their free cash flow to operate and open up these data centers. That $600 to $700 billion is not all just extra cash that these companies have on hand. They're actually going into debt to make this happen. So if that doesn't work out in the long run, a lot of companies are going to be in a lot of debt, which overall is not good for the stock market, for the company as a whole, for their employers or employees.
Yeah. Historically, what we've seen from these hyperscaler tech companies is that they have so much excess cash flow that they are able to fund a lot of the projects that they do with cash reserves that are sitting in their account. Companies like Apple, with the highest cash on hand out of any companies, they are, for the most part, tech companies. Now, what we've seen over the past year is the capital expenditure on projects like this is becoming so large that even the massive, largest companies in the world are using debt financing to build these data centers. So we're talking about extreme leverage to build physical warehouses of data centers, one thing or another is going to happen. Either these data centers are going to be extremely profitable and the AI boom is going to continue, or if revenue doesn't catch up to that, a lot of these companies may be sitting here with a ton of debt and not enough cash flow to cover the debt service on that.
Yeah, just not able to recoup it. Whenever you're talking large numbers like this, hundreds of billions of dollars, that's not easily recouped either. So this has to be a massively successful project for these large companies for this to work out, which I think that's the risk that a lot of people are seeing in the stock market. Is there's so much money flowing in, their stock prices are increasing due to, these ongoing projects and expenditures that are expected to go through. But what if they're unsuccessful? And that's not a question that we can answer today, and that's not to scare anybody, but those are the concerns of investors right now.
Yeah, and we can look to some examples throughout history, right? So whenever the railroads were being built, this is a similar circumstance as then, because you had companies racing to lay the infrastructure, literally lay the tracks for the railroad as fast as possible. So they're pouring money into it. Companies are popping up all over the place, pouring money into the infrastructure build out. And many of those companies overspent, took too much debt on, laid the foundation, and their revenue never caught up. They never made enough money to support the debt that they had. And a lot of those companies went bankrupt and fell off. So it can be a very similar situation, and it probably will be a very similar situation. You're going to have winners and losers, as you do with any new industry. So talking along the lines of the actual inputs of what's going into building a data center, investors don't have to find the next NVIDIA or the next AI company to take part in investing in this. Investing in the entire supply chain of building out these data centers is going to be pretty lucrative if this whole thing turns out. So what are some of those industries that are playing maybe not a direct role, but a supporting role for the build out here?
So, yeah, I mean, looking down the pipeline, you can look into the utility companies, you could look into the chip makers, the coaling infrastructure that's in place, and even the real estate, because that's something that's piqued a lot of interest is how much real estate these companies are actually buying up. I saw a post on, it was either Facebook or Instagram that was from, I think, 2022, a picture of, it was a forest, whatever it might be, a wooded area. And then today, data center. And same thing, probably 10 other pictures, but these are massive plots of land, massive areas that these data centers take up. So there's really many places along that supply chain where you can get invested without doing individual stock picking, because that's where a lot of this risk comes into play. If you're trying to stock pick, it could turn out like the dot-com bubble, where you're trying to pick the next startup where maybe it didn't work out. You might be able to pick something where it's more so sector based, where you're getting exposure to more companies than just one, and that may work out better in the long run, which I think we could agree is a lot less risk overall.
Yeah, when a project this big is being undertaken, there is not just going to be one industry involved, one company involved. The entire supply chain is going to have to play a role.
Yeah.
You mentioned the real estate. I mean, there's people buying raw land and wholesaling it to companies so that they can then develop it and build the data centers on. Nuclear energy is becoming pretty popular in this regard, as well as the electricity and the raw materials needed for the physical building, cement, metal, et cetera, et cetera.
Yeah, I mean, that plays into some of these industrial stocks that have had over 100% returns in the last year, because they are, building these data centers. So it just kind of ties directly to the fact that to partake in the gains or potential gains of this kind of AI boom, you don't have to buy an individual stock. You don't have to buy directly into an AI company. You can get exposure in other areas of the supply chain and hopefully take on less risk in that aspect.
Yeah, and a part of smart investing is analyzing a sector or analyzing a project and looking downstream of that, of who else is going to benefit. So those are all great points. To kind of wrap everything up here, what we touched on is, what is a data center? Why are people hearing about it now? And a lot of that has to do with the AI infrastructure build out, the race to create the best AI, the fastest, the most all-encompassing AI.
Yeah.
And what's yet to be seen is that whether these large bets that these companies are making are going to pay off. Are we in a bubble? Are we not in a bubble? And is the leverage or the juice worth the squeeze here?
Yeah. Overall takeaway as an investor is, don't get greedy trying to pick the next stock. Diversify your portfolio, look down the supply chain, and you can get exposure in many ways. So don't limit yourself just to buying one holding or one stock. Key is diversification and investing in the long term, depending on your goals.
That's right. Well, with that said, thank you guys for joining us for another episode of Compound Growth. We appreciate it as always, and we'll see you next time.
See you next time. Thanks.